All right, good morning, folks. Well, this is the Forex report for September 10th. And a little while ago, I sent you an email regarding the dollar yen and the implications of the pattern on the dollar yen, the downward wedge, the fact that we've broken beneath a 15-year low, the falling wedge, should I say, and the drop off in volatility on the yen. So I'm not going to cover that today. Go and have a look at the email I sent you with the chart attached and make your own decisions on that. And as I said, the rally that could take place, which I'm expecting should take place in the next few days, may or may not happen. But there's a good risk-reward ratio on the trade, and you can read all about it in the email. What I'm going to focus on in today's video report is the euro, and the euro weekly directions long. I've got it drawn in on the chart, and I've covered this in the live sessions that we've been having, so you'll understand where this line comes from. And it's basically from the weekly chart using the normal determination for this week's direction. So as long as we're above this level here, this red line, it's around about 2620, we remain bullish for the week on the euro. And if we go through the previous few days in this week, you can see that on Monday and Tuesday we had quite a long downward movement in the formation that's known as a waterfall. And this waterfall pattern gave several false signals, G7 signals, to buy the euro, and resulted in a couple of losing trades. However, since then, over these last 2 or 3 days, there have been some good long trades on the euro and opportunities to buy this currency over here and over here and over here yesterday. And so we've had 3 good winning trades on the euro, and we're still long for the week. We seem to be holding above this support level, this black line here. And if I just go into sort of zoom out mode, I'll show you where the support level comes from, and you can see it's actually a 78.6% retracement over there. In fact, what I could do is just remove the black line and rely on the Fibonacci analysis just to give you an idea. So there it is right there. In fact, what I'm going to do is remove the other ones, those ones, just to remove the clutter off the chart, and you can see we're at that 78.6% level. So what we're looking for here really is a continuation of the bullish move on the euro, a move higher. We'll have to see how it pans out. We're looking for another G7 signal, which may or may not happen today. It's the last day of the week. Friday is always a difficult trading day, but it's also September the 11th tomorrow, and despite the fact that this goes back a long time in history now, these sort of days and these commemorative occasions still cause the market to be jittery perhaps and a little bit thin, lightly traded. Some people might be taking the weekend off and today off for memorial services and so on. So could be a slow and jittery day, and I'm not expecting a lot to come out of it, but we're still looking to buy dips, and naturally the red line is the dip beneath us. That's the area where we'll be looking to buy the euro. What it looks like has happened actually over the last hour or so is that we've had this bully candle pattern, which I missed because I wasn't at the screen at the time, but you can see there's for those who have studied the bully candle process, you can see that there's the bully candle there where the mouse cursor is. Let me just zoom in a bit. So there's the bully candle breaking beneath the support, and then there's the bounce up. So this could well turn out to be a bully pattern. Unfortunately, I wasn't able to get hold of this trade because my charts just weren't open. But we'll have to see how it goes. You know, we may continue upwards after that bully, or it might just continue to move downwards. We'll have to wait and see. Direction for the euro, still long. Right, I'm going to move this across. I'm just going to save that file and then get rid of this, and I'm going to move the pound into the screen. Now, the pound's been bearish for the week, unlike the euro. So we've had actually a bearish week on the pound, and if I go back to the beginning of the week, if I can just get these moving averages to fill in, there we go. If I go back to the beginning of the week, which is here, this is Monday, and you can see we've really moved steadily downwards since then. Downward, downward, downward. A little bit of a rally a couple of days ago, another downward movement, and then a big rally during the Asian session last night. Sorry, you know, I've got completely the wrong chart. This is meant to be the pound. So I'm just going to leave this on, warts and all, so you can see how silly I am. Here we go, here's the correct chart. So, in fact, everything I was saying was completely untrue because I was showing you the wrong chart, and we've had actually quite a different pattern on the pound. Let me just get all this. There's a weekly reversal level on the pound. One of these moving averages to fill in. So there's the weekly reversal level. We're bearish on the pound. Once again, this comes from the weekly chart, and we're looking to constantly sell the pound into rallies this week. There's the start of the week, and you can see we've had some good down moves. A lot of them I've not been able to take advantage of because they've been outside the trading sessions that I trade in, but some of them have been pretty good. For example, excuse me, there was a good downward move in early on Monday. There was another opportunity there, and there was one in the Asian session over here which formed another bully candle, which some of my members were able to get into, and selling against that top Bollinger Band, the bully candle downwards, the reversal. And then we moved down quite sharply. We've just rallied up yesterday a bit. Again, 3 bullies, and in the Asian session, the reversal, again the bully, famous bully candle patterns. They're extremely reliable. Every time they work out. And then we just had another move down. So we're looking to sell the pound into rallies. As long as we're beneath that red line, we're looking for the pound to move higher to some of these retracement levels so that we can sell into those levels. And of course we need the stochastic to be overbought and so on. So the first natural resistance level is up here where this black line is at around about 1.5 ish, and that's where this previous resistance is from going back all this way. Let me just show you previous resistance going back all the way along here. That's where the bully candle took place, and that's where the 2 top Bollinger Bands are. So that would be the first natural area of resistance. There's nothing to really look at until we move up there, because we have to be at the moving averages or the Bollinger Bands, and we have to have an overbought stochastic. So it'll be interesting to see how today goes. Is the dollar going to rally against the euro and the pound, or are they going to rally against the dollar? I'm not sure if we'll get any good opportunities to trade today, but you never know. September 11th, tomorrow, end of the week, thin markets, and well, possibly a good day to be out of the market, except for maybe the dollar yen, that trade I sent out. Incidentally, the dollar yen trade, not for my lab rats project. Take care.